In a significant update for low-earning pensioners, the National Pension Commission has announced that retirees can now withdraw their total retirement savings in a lump sum or continue receiving their monthly pensions while awaiting approval of the minimum pension guarantee. This change, detailed in a memo dated November 27, 2024, and signed by A.M. Salem, that is the head of the Surveillance Department, follows a recent increase in the national minimum wage from 30,000 naira to 70,000 naira, as enacted by President Bola Tinubu. So to help us understand this better, most especially for pensioners, I have Tunji Andrew, CEO, Awabah. Thank you so much, Mr. Awabah, for joining us on Business Edge. Can you hear me? Or you will need to unmute your device. I hope the network is favorable. Okay, can you please say something?
Yes. Can you hear me?
Okay, yes, we can hear you right now. Thank you for joining us. So, before this announcement, retirees are only allowed to withdraw 1/3 of their total contributions. What were the reasons behind the previous limitation, and what prompted the change to allow full withdrawals?
So, if you generally look at the way pensions work, the core thought behind it is that you have some sort of after work life salary, so that you get a monthly payout every month for a long part of the rest of your retirement situation. So the long part is for you to make some work life adjustments, and then the rest of the money is then spread into monthly payments to your account. That was the real thinking, and it's not any different from most parts of the world. It's really a global standard. The recent conversation really is around what that monthly payout is, vis-a-vis the new minimum wage and also the current economic realities, where if your monthly payment, if you were to take out 1/3 and do a lump payout and then spread it out, if it is not up to 23,000, the commission has said that it would make a lot more sense for the pensioner to get that entire money, or given the option to the pensioner to take it as a lump sum, which I think is a very welcome development, because at least if that money is given to that retiree, the person can be able to do something reasonable with it.
So do you think it will be beneficial? So because if you say that they'll be able to do something beneficial with it, I'm looking at the entire sum for what someone within that category would earn and how it would benefit the person if the person is going to be withdrawing that. For some people, they'll call it paltry.
Yeah, but you see, the unfortunate scenario with pensions is that it's usually what you save. So if you started saving to your pensions maybe when you were 45 and then you retire at 50, you've only had 5 years worth of savings, which would be good and significant, but would not be as if you were saving from when you were 20, for instance. So the general context is try to save as early as possible so that you can have enough in your pension pot to be able to, keep you when you have retired. Because those days you won't be able to do much work, you'll be able to do much running around, but you need something that will be a sustainer on a day-to-day basis. I try to tell people that it is better to have it and not need it than to need it and not have it.
Okay. We're still going to look at this. Probably there are drawbacks, but then stay with me, Tunji. We'll go on a very short break, and when we return, we'll continue with the conversation. So based on the new minimum wage, 70,000 naira, pensioners can now withdraw the entire sum if they want it, or probably have it paid to them periodically in terms of withdrawal. And we're looking at the benefits, looking at this new regulation from the National Pension Commission in Nigeria. And I've been talking to Tunji Andrew, CEO Awabah, to have an understanding of how this will benefit, most especially the pensioners at this time. Thank you so much, Tunji, for staying with us. Now, we've had situations where whereby some pensioners, when it comes to accessing their contributions or their funds, would have to wait. There are paperwork, there are issues with being attended to on time, and that weighs down. These issues actually weigh them down at some point. So I'd like to find out from you if there are any drawbacks looking at this for the retirees, most especially for those who even choose to withdraw the entire retirement savings accounts balance instead of having to receive monthly pensions.
So it's always advisable that you start the process at least 6 months before you retire. Generally, to just get all the paperwork in line. There are some people that need to go for data recapture just to be able to make sure that all their details are correct. And this is also a bit of a reminder for everyone that has an RSA out there that it's important that you go for a data recapture if you've not already done so. It makes the process a lot more seamless when you are retiring. But for people who are getting the lump sum, it's just one added process, which is, of course, the regulator approving that lump payout of the entire money in the retirement savings account, which doesn't take anything extra, a lot extra with the normal proceedings. So I honestly feel if you can do it, starts the process 6 months before, you'll be able to get your normal payout at the time. I don't think we have those situations where there's delayed payment or situations like that. In fact, I've seen that the turnaround time has gotten very, very short because the regulator, the PFAs, they've now become very, very technology driven. So it's a pretty much better system as we have it right now.
So I don't know if there are financial advisors for these pensioners, because, you know, if I'm going to put you on a spot now and you're going to have to advise those who want to do that entire withdrawal, won't a one-time withdrawal decision affect their long-term financial security? Of course, it's their prerogative, it's their right. But then in terms of advising them when it comes to these withdrawals, I mean, wouldn't it affect them financially?
So it's part of the value-added services that I know that PFAs offer, not really as a service, but more like capacity building for their customers, where they try to do regular conversations and engagements on, you know, how to manage your life in retirement and things like that, just to be able to make sure that the retirees are better prepared. So I know that every PFA continues to engage, you know, putting out all sorts of information so that the retirees can be better prepared. So I would say that, you know, anybody that has an RSA right now should take advantage of those classes, all those kind of seminars and things like that that happen. And they're usually free because they're just, you know, forums for you to be able to talk about retirement and just, you know, speak about it openly. But in terms of you've gotten your lump sum and what you want to do with it, there are several licensed and registered financial advisors who that is their job to be able to advise you on how to better invest your money. The SEC has many of them licensed, so you might want to speak to one of them. But I think no matter how much you make, there are ways to be able to go around it. But I think what the regulator, the pension regulator, has done here is that because of the fact that they feel the money is really not big enough, they want to be able to put a lot more power into the hands of the retiree to be able to say, we can't really do much here. You know, there's so much we can do to be able to help because you don't have a lot in your pension pot. You know, take some of this power, you know, run with it. You know, you'll be able to make some better decisions with yourself. Now, if the retiree then says, I don't know how to manage this, continue to manage it for me, even all the better, because that even works better for the pension system.
From the point of the administrators, I don't know how many pensioners are on the various schemes of the different administrators, but then when we begin to have the traction of withdrawals, most especially these entire withdrawals for the low-earning pensioners, is it going to affect probably the portfolio of these pension administrators, so to speak?
No. So the way pensions are structured is that, you know, most people are saving for a very long term. So there are people who are in their 20s who will not, you know, start getting payouts till they're, you know, well 2, 3, 4 decades into the future. So there's always enough money into the pot and it continues to swell. And you must also remember that, for the fact that this is a very small amount, it's not going to affect the pot because you are just taking that small amount out of the pot. Sometimes the entire lump sum might not even be up to the 1/3 some people are being paid out in their own pot. Because if your entire, and the entire money you have in your retirement savings account is 1 million, and somebody has 100 million in their account, the 1/3 of that 100 million is far bigger than the 1 million that you're being paid out as lump sum. So it's really different scenarios. But from what I know of the pension system and the robustness of how the retirement pot is managed, no, it will not affect it.
Thanks for the clarification. I had to ask that because we had a similar situation in South Africa, where of course they actually have a two-pot system in place, and it's almost crashing the system because of the volume of requests being made. But then let's put in context rather, the South African two-pot system. It was actually put in place to help pensioners manage finances, their savings, retirement funds, and withdrawals. Does the pension scheme in Nigeria have something of that make, or can that be adopted for proper management?
So for context, we have a different model here, and that really helps the system. And you must also realize that one of the things that we are thinking about, at least I feel that the country as a whole is thinking about, is the sustainability of its citizens. So there is the fact that you want people to have retirement savings, but there's also the fact that you realize that there are a lot of people that are vulnerable in the society. So you want to be able to make responsible decisions for the larger majority. In South Africa, one of the things that has happened is that because they created a two-pot system allowing a few people to migrate and then make withdrawals. What happens is that you put a lot of pressure on the pension system, and then, like it's happening in South Africa, there's a lot of strain on it. In Nigeria, we've seen a lot of people call for this. We've seen a lot of them try to call to move from their mandatory system, that they were working with before. Maybe now they're into entrepreneurship and they want to move the entire RSA into the micro pension pot, so that, the general idea is that if I move all my money to the micro pension pot, I'll be able to withdraw 40% of it. But that has not been allowed yet, and the regulator still continues to look at it. And my thinking, and I don't know what the regulator's thoughts would be, was that even if you want to move to the micro pension system, it will be great. You still keep your RSA, but the money that you've put in your previous pot will still be there, and then you can move forward with a micro pension system so that you can then operate it as a normal micro pension pot. But those are my thoughts, really. I don't know what the regulator is going to do. But one of the things I've always noticed about the regulator in Nigeria is that they're so very thorough in their thinking about how to make sure that the system is sustainable. So if you think about it largely, you'd realize that there's no decision that will be taken without taking the long-term effect of how it will affect Nigerians into mind.
Would you explain the minimum pension guarantee? A lot of people would like to have an idea of what it entails and how it is expected to function in conjunction with the new regulation.
Okay. So this is it, right? There is a certain amount that is guaranteed. So if you have a pension account, a retirement pension account, there is a minimum amount guaranteed to be made available to you at the point of retirement. Sometimes, and I'm trying to be careful with my words here, even if you haven't saved up to that amount, it will be made up to that amount. However, it's such a small amount that it's almost impossible that you wouldn't have saved up to that, really. So yes, it is a guarantee, but still it speaks to the fact that, there is, I look at it more like a social safety net for the very, very vulnerable, in the society. But I don't think that there's very many people who fall into that situation.
Okay. All right. Thank you so much for the education. I had to put you on the spot because a lot of people, most especially within the pension system, those who would like to withdraw from that would like to have an idea of the guarantee so they know how to go about their savings and what they can get or expect to get at the end of the day. Tunji Andrew, CEO Awabah, thank you so much for sharing these ideas and, of course, these explanations with us on the show. Thank you.
Thank you for having me.